wanted to introduce my friend Ralph Kraus to you. He's a mortgage lender with Priority Home Loans right here in Kitsap. So thanks for being here, Ralph. What do you think of this house?
Oh, it's amazing. I just saw another waterfront bedroom. I mean, every time you turn around, you have another view of this place. The house is incredible, and the setting it's kind of amazing.
I agree. And there are 2 more bedrooms on this floor. The primary is upstairs. 2 more bedrooms down here, plus a bunk room. So you can fit a lot of people in this house.
Oh, yeah. And being an investment property, as you mentioned, I mean, what a great way for somebody else to pay your mortgage for you.
Absolutely. You know? Well, and that's the important thing too. So we're going to talk about several things with regard to mortgage.
Sure.
But one of them is about an investment property. So what if somebody wanted to buy an investment property, whether it's for an Airbnb or the house hacking right now is the big thing.
Sure.
So tell us about that.
Well, most any and all lenders, priority home lending, of course, we deal with investment properties all the time, and it's a way to build wealth. It has been historically, and it is still today. Down payments, of course, required. Good credit, of course, is required. But once you're in the property and we show the rental income, that goes towards you affording the property. So you can turn a credible property like this into something that for your future generations, it will have been paid for by your renters.
It is pretty amazing, and mortgages are not cheap right now.
They're not.
So to have somebody pay your mortgage, and maybe an Airbnb or a vacation rental is not the right thing for you.
Sure.
But you do want to maybe buy a place. You don't need a big place, but maybe it's a duplex or a threeplex or a fourplex.
Right.
Is that something you can do with a traditional loan, even a VA loan?
Absolutely. So VA, FHA, conventional, all apply to investment properties, whether it be a 1-unit, a duplex, a triplex, or up to a fourplex, like you say. And the other part that a lot of people do these days is they buy a property like this, incredible home, incredible setting, and they use it for themselves for a couple weeks a year, but then they rent it out for the rest of the year. So you're getting the benefit of a second home ownership with the ability to earn extra income on the property.
And again, like you said, somebody else paying your mortgage or part of it. So that's pretty incredible.
Right.
So, let's talk about mortgages since we're talking about that. And interest rates right now are challenging, to say the least.
Right.
You've been a lender for how long?
21 years.
That's a good long time.
It is a good long time, I know.
So you've seen almost everything in mortgages.
Of course. And from a historical perspective, I mean, if you look at a 40-year time frame, I mean, mortgages are fine. I mean, are they as exciting as they were 18 months ago?
Sure.
Absolutely not. But there are ways to still make a mortgage affordable, right? You can do a buy down, right?
What does that mean?
So what a buy down is you get an interest rate today, say 7 7/8, just as a ballpark figure. Year 1, you get 6 7/8. Or you can do a 2-1 buy down. Year 1, it goes down 2%. So 5.875. Then year 2, it goes to 6.875, and then back up to 7.875. The thought process there is, as we all know, interest rates go up and they go down. So if we can buy some affordability in the short term, then you can always refinance down the road to a rate that is more palatable, say.
So, and that difference between 1% and 2% on savings on a mortgage, that can mean the difference between being able to buy a home or not buy a home.
Yep, absolutely.
So we're looking at maybe a few $100s a month in savings.
Hundreds of dollars a month in savings. And right now, as a bank, as a personal plug, we are offering a 1-year buy down at no cost to the buyers.
Wow.
So we understand the affordability issue. The good news is interest rates have in fact come off their peaks and are back down in the 7s. So, if I said to you, I can get you a rate in the 6s for the foreseeable future, that's pretty appealing considering where rates have been.
Sure. But the difference between rates, so let's say a year and a half ago, were at 3%, 3.5%.
Yep.
Now rates are double that. So that's kicked a lot of people out. They just can't even buy at this point. What's the difference between a payment, and I'm not talking anything specific, but between a payment at 3.5% and now at 7.5%.
Well, at your average home price these days in Kitsap County, you're probably looking at $1,000 a month. So
Wow.
it's affordability is an issue. And the argument always has been that, well, rates have been this high before, but with the home appreciation that you've seen,
Sure.
it makes a difference. So when you had an 8% interest rate and a home was $200,000, it wasn't that bad, right? The affordability issue didn't come into play. But now, when the average home price is, you'll have to tell me, $650, $700
Yeah.
in Kitsap County, $500, $600, $800 a month, affordability becomes an issue. So you just really need to look at ways to make that more affordable for the individual, whether it be a buy down, a gift. Many and all programs allow for a gift. There's a huge amount of money in generations that are being passed down to younger generations.
Absolutely.
And one of the big things we're seeing is that providing money for home purchase now rather than them inheriting the money 15 years down the road.
That makes a huge difference. And I just saw a recent statistic, more than 50%, and it may be even up to over 60% of homes right now in the United States either have no mortgage whatsoever,
Right.
or have a mortgage that is less than 50% of the value. So there is a lot of equity
There's a
out
ton of
there
equity,
in
yeah.
homes. And then anybody who bought a home in the last 2.5 years at 2.75 to 3.5%,
Right.
they're not moving.
Right. Typically, they're not moving unless there's a need, right?
Sure.
It goes back to the
There's
old
always a
reason
need.
there's always a need. But it's interesting when you look at this particular property as being an investment property is there's ways to access the equity in your home.
Sure.
Whether it be a home equity line of credit or home equity loan, and put that money to work in an investment property.
Sure.
So it's a way to leverage the equity that you built up over the last few years or the last 20 years. To your point, 60% have over 50% equity in their home and put that money to work. It's just another reason why to get out and buy an investment property.
Yeah, it's a powerful tool. And right now, while we're not seeing that home prices are significantly dropping, we are seeing fewer homes still on the market because all those people with small or really small interest rates are not moving,
Right.
in general.
Right.
And then also, there are still a lot of buyers out there. But buyers are being really picky right now.
Right.
And so that's become an interesting thing to see in this time frame right now where we are at the end of 2023.
Right. Well, and those are the conversations we're having is from the financial side, if they're making that commitment to spend that money per month at the current interest rate environment, they in fact want something that is quote unquote perfect for them. So, and it's very understandable. It's a big commitment on a monthly basis. But if it makes sense, it's still to the better because from a historical perspective, Kitsap County has increased about 4.9, almost 5% appreciation over the last 60 years. So if you said to me, hand me your money and I'll give you 5% return on your money over a course of 60 years, I think most of us would all
Sure.
do that. And oh, by the way, getting the comfort of a beautiful property.
Right. And especially if it's an investment property because you're making money every month while you're paying
Yeah.
the mortgage and increasing value too.
Yeah.
So, so let's talk about one more thing before we go.
Sure.
And that's, the matter of what the future holds. Do we even know? Can anybody even say? So you talked about the interest rate buy down.
Right.
And so, one of the things that that we look at a lot in real estate is, so we have a house listed. We're not seeing activity on it
Sure.
right now. Sellers talking about reducing the price.
Right.
But then a lot of the conversations we're having is don't reduce your $715,000 house to $700,000.
Right.
Let's offer that $15,000 to a buyer.
Right.
What's the value of that $15,000 to a buyer, whether it's in a buy down or just reducing the price?
So it's actually quite incredible, and it's an odd conversation, but the net effect to the seller, of course, your seller is the same money. whether they reduce that by, I'm going to use $30,000
Sure.
as an example. If they reduce it by $30,000, that saves the average buyer with a 20% down payment on that home about $150 to $200 a month. But if you deploy that same $30,000 and offer a buy down, for example, a 3-2-1 buy down on a $700 and some $1,000 house is about $30,000. Well, in year one, you're buying down that interest rate 3%. So let's just use our example as 7.875. So now we're getting it down to 4.875.
Wow.
Right? That's about a $1,200 a month difference in general.
Oh my goodness. In your monthly payment.
In your monthly payment. So, $12,000, $13,000. Year two, $700 or $800. Year three, it's 1%, about $400. So you're creating about a $30,000 cash flow benefit to your buyer or your potential buyer for your listing, rather than the $100 and some that it would create by doing the same thing in a price reduction. So the power of the buy down right now, dollar for dollar, is pretty incredible for the buyers, and it makes it affordable, because when we look into the future and we anticipate the normal course of interest rates going up and down, you can kind of see 3 years out. The good thing about economists are they're never wrong. The data has just changed, right?
Exactly.
So, but if you look 3 years out, the thought process is that rates will in fact have moderated somewhat to where it's a more level that these current buyers are used to. 20 years ago, 9%, 8%, pretty common, but again, houses are $200,000.
Sure.
But the buy down, rather than a price reduction, is a pretty powerful tool right now.
And the majority of lenders that I'm seeing right now, including Priority Home Loans, if you do get this loan, you get the 3-2-1 or the 2-1 buy down.
Right.
And then the goal, as you said, is that within the next 2 to 3 years, interest rates are going to drop down.
Right.
And so the hope is that the interest rate, by the time you get back to that, whatever the 7 7/8 is right now, that before that kicks back in the second or third year, that interest rates will have dropped below that, and then you'll refinance. And most lenders are offering a free refinance if you mortgage right now.
That's right. So it's called the Refine 5, and Priority offers that, as does some other lenders out there. If you refinance in the 5-year period from the time of purchase, it's a no lender cost. Of course, you're going to have other fees, right? You're going to have title and escrow and such, but there's a no lender cost. So we're kind of saying, here's another nugget for you to get past the hurdle of buying a house, what seems to be a daunting time, when in reality, I mean, it's a great time to buy a house. There's some homes on the market, I guess. Is that right?
There are, absolutely. Yeah.
So,
and there are some amazing homes on the market, like this one, for example.
Yeah, for this one, for sure.
Yeah.
This is a nice property.
It is a beautiful property and secluded, and it's just a great opportunity. Ralph, I appreciate you being here. Thank you for taking the time.
I always like talking about mortgage. Thank you for having me.
And you're great at it, so we sure appreciate you.
Sure.
Ralph is our own mortgage guy, so we've used Ralph a few times, so we appreciate that. So I hope you enjoyed this little tour of a spectacular home. I'd like to do this a little more frequently. I'd love to hear what you think, so give us your feedback. Thanks for being here.